The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi, folks. Just let me do this real quickly. You've got the E-mini. It made a low this morning of 58.66, round number low, and went to peak A, peak B, peak C. And if it can go just above the high of 59.33.75, that'll be a good sign, because that'll be leg D, and 59.40 is the 200-period moving average. When I was looking at it at 4:30 this morning, and it started to go down, it was amazing. It just tanked, and from about the 590, almost 5,900 area. And all of a sudden it came down, and then it started to rally. I'll talk about this in a moment. I'll come back to it, but that's just what I wanted to say about the E-mini coming back strongly. So here's what I want to go through. This is Technical Friday, so let me go through this in a very technical way. Let me first start off with my overall picture. The overall picture basically says that within the context of the Chapman wave, which almost always goes to a peak D, especially at all-time highs in daily charts and weekly and monthly charts, before it starts a more serious decline or a move to the upside. The Dow went to a peak C, and it had me a little confused because it looked as if it should just make an attempt to get to that, for me to get to that D, to be able to say, wow, now I've got the sell signal, because the Dow has gone to a D, and that would be around about the middle of December 12th. The 4th of December was the high of 45,073. The S&P did exactly that. It went to the high that was made early in December at peak D at 99.97, just missed 6,100. Trading right now down to the 58.57 level. Peak E in the weekly chart. I meant to mention that the Dow in the weekly chart had gone to a G/C. A lot of these Gs now have been failing, and I'll show you as we move along that the weekly, by the end of the day today, could give me the first weekly sell signal in absolute ages. And that's only because I really need the second week, a second bar underneath the 14-period moving average to confirm that. But I'll wait till the close to make a decision, because that 9 is still sharply above the 14. So either this is going to be a concerted down move that goes on into January, maybe even February. I don't know, but we'll talk about that. But look at the Dow. The Dow, and I spoke about this during the week. I said the Dow is at under 10%. It's in the 5%, then the 3%, and today it's at 2% in the stochastic. It's the complete opposite of what we were looking at when it was trading up at the 98% level before it turned down. And those were the clues that you start to see some weakness. But that 9-period moving average took right up until the 13th of December to cross negative. So with that said, the Dow became the weakest link. It's amazing to see, 9 or 10 sessions in a single leg A. Yesterday was a fractionally higher high. We tried to, just as a trade, we tried to go long. If I got my newsletter out earlier as I wanted it, people would have been able to get long, and it probably would have hit the number that I was looking at to be able to raise the stop. So that if there was this turn down, we would have been stopped out with either a little bit of a gain or a break-even trade. Why did I do that? Because the stochastic was so low, and because the other indices hadn't yet started to tank. But now let me show you what's going on. So the S&P, I just explained, made that peak D. The QQQ, unbelievable. Just have a look at this. The QQQ, the NDX 100 trading vehicle, goes to an all-time high on the 16th of December. 539.15 all-time high. That was leg F in the daily chart, leg D in the weekly chart, leg D in the monthly chart. And what? The open on that day was a 500. Let me just double check that, because it was Yeah, 533.00, a round number at the all-time high on the 16th. And here it is today, traded down to 509.29. Right now it's at 511. So that's how potent these technical indicators are. But my major point, and thank goodness we've been placing positions and taking profits from our really strong positions that we've had from much lower down, August the 6th, etc., November, the low, October, the low, but at the same time, taking money off because these are positions that I really love, and I'd like to be able to add back a whole chunk of those to really get back into this, the 3 or 4 sectors that I've chosen or stocks that I've chosen that have done very well. So with that in mind, I'm looking at those weekly charts. Even the QQQ today has just touched the 9-period exponential moving average, which is way above the 14. So if this is going to be a sell, it's going to be a concerted sell. But my contention is, I'm going to mix things up because this is the way I think, because I like to get the broad picture, and as I'm getting the broad picture, I have to jump around. But have a look at this. This is the, it's not the chart that I would like. I'd like the chart. Should I get it now? No, I'll just show it to you. Look, this is the bonds, and I'd be very worried about yields going much higher. So bonds have been making lower lows and lower highs. A dreaded H pattern has gone to a lowercase m pattern. So it's really important. And it's the first big break that we've had in the bonds. But if you go to the TNX, and the TNX is actually the instrument that a lot of the credit cards, all those transitory instruments that are being bought, not necessarily housing, but everything else, really, I think is dependent on the 10-year. Well, look, I said you've been here many times before in this horizontal line, so you shouldn't really be afraid of it. It's next year. We don't really know because, as I see it, there's a lot of slowing down as I read the economy in the different sectors, and those sectors are telling you that there's going to be a slowdown in hiring, probably in January. So I'm just trying to put the picture together to say yields looking out, you can only anticipate, and I'm anticipating that the yields are going to be higher, at least in the first part of the, maybe January, February, but that doesn't mean it's the whole year. So now let me go back to the story, because the story is the QQQ made its all-time high with a round number open and a 539 high, and it's pulling back, but the weekly chart is still good. The monthly chart has got a leg D. I have to wait all of January before I can call the 539.50 a high, because if it gets taken out, that extends the leg D. Okay, so that says to me there is residual strength, internal strength, based on what I'm looking at. The SMHs, and I had a question, wait, the SMHs have been a clue, haven't they, for the pullback? Well, look at the HMA. The semiconductors made a high in July at 283.07 and plummeted down to 200 level, but they bounced all the way back to the 260s, made a little double top peak C1, C2, and even now they're still, the 9-period moving average is green. So they're only saying, be careful. They're not saying that's the clue that we're going down, a crash is coming. I wanted to get that out to say the reason why I'm still looking positively to the Dow, not short term, but looking out a little bit intermediate term, is because these things are still good. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, so just as I'm going through this, I went through a bunch of these the other day. I mentioned them here during one of my shows, and Peter in the den just says, CTAS, Basil saying weakness to come. Look, this is Cintas. I mentioned this the other day. Cintas Corporation Uniforms Rentals made a double top 227.36 cup formation to the 228.12 all-time high. It came within less than a point of that double top high. I mean, it's amazing, right? That was a peak F in the daily, peak F in the weekly chart, which now has a down arrow sell mode. Sell signal upgraded almost immediately to a sell mode in the weekly chart, and a G/C. And I've told you that I like the market to tell me what my notation familiarity is. And so far, I'm starting to see Gs that don't go to G/C, but they actually go to Gs. And I'm watching this very closely in the monthly chart, and it's at a G. So that's Cintas. If you go to WM, waste management, and I always say waste management, I mean, that's every city and town needs something like a waste management. If that starts to turn down, then there's some kind of economic slowdown. What it made a 230.39 high on the 27th of December, the very same day that it made a 229 round number high. And it's gone from 230 down to today's low of 204, 30 points. I would say that that's a pretty big correction. Peak D in the weekly chart, leg E probably a peak B, because I can't see it getting to 230.40 in December, so it's a peak E in the monthly chart. I can go on with others. Uri's another one, but there's so many questions that came in. I want to get to them. Peak F in the United Rentals, peak F in the monthly, peak D sell mode has got upgraded today from a sell signal to a sell mode in the weekly. And look at this. 896.98 was the all-time high on the 11th of November. It had an 885 round number high at the top. I've been talking about this all week. Well, what I've been saying is it is not there are many of them, and they're very important stocks, but I haven't had as yet a plethora of those at the top. And that said to me that some of the sells are coming in because they are market conditions, not necessarily specifically the overbought condition. Look at Amazon. I mean, Amazon now has become, for me, an economic cycle, right? When Amazon turns down, you've got to be careful. Well, it hasn't yet, because it's in a leg D in the monthly chart. It's in a leg D in the weekly chart. Excuse me. But wait a minute. It had a Chapman wave 2-bar reversal on the December the 16th, right? And what did it do? It made a high of 233.00, a round number, all-time high, and it's pulled back a little bit. So I'm watching this very closely. So what I'm doing here is I'm trying to emphasize that there are conditions that are impacting in a cyclical way various very important I call them economic stocks. I don't know what else I could call them. I mean, Uri tells you about rentals, etc., etc. So I'm looking at this, and Amazon, as I say, is really a cyclical stock. I mean, when the economy slows down, Amazon's going to pull back. This is and they've got the strikes going on right now. So I'm watching this closely. However, look what happened with the IYT. This is the iShares Transportation Average. I was speaking about this at the end of November. I said, look at this. This is a good sign that the transportation average is coinciding with the Dow making all-time highs. However, going back not 10 years or 20 or 30, going back forever, as I used to always read Barron's. I used to be a guest in Barron's years ago. My newsletter was there on their page that they used to have when they had a quote from just a handful of national analysts. And look at this. Transportation average, as I can always recall, it's just the back of my mind said, wow, whenever I have a coincidence of the Dow theory where it's fantastic because the transportation average is going into all-time highs with the Dow, I always say, is that a problem? Well, look at the it went from 75s. I don't remember if I saw any round numbers because it's an index. You don't usually see them in indexes. You occasionally do. All right, all-time high of 75.59. Trading today 66.74. So that is something to take seriously. But there isn't this Joe Granville coincident top that says, wow, you make a top, 95% of stocks go down. This is rotational. And that's why I said, has the Dow made its top like in January of 2000? And then only in March did the SMHs, the semiconductors, and the S&P make its top. And even then, that whole year, remember, Clinton handed over to, was it Bush, an economy that was tanking. Nobody ever talked about that. He was the hero, right? He handed over a fading economy. That's what happens very often. So I'm watching this very closely. And the rotation says you still have intrinsic buying coming in. And at some point, there should be a rotation where fund managers say, I'm kind of done with that sector. I want to move into we're going to start talking about low PE stocks very soon. Look at this. Eli Lilly had a big, I don't know what they had today, but they had a big spike up. But it's been in the doldrums for ages. But I think that the PE must be we're going to start looking at stocks like, I don't know about Eli Lilly, but I'm saying stocks that have low PEs that are starting to do well. That was my whole theory. So now let me go questions that I had. First of all, I wanted to get to this immediately. Eddie had asked me the other day about Essentia PLC, and I said to him, it's making this arch formation. I've got this Chapman wave inside track propellant zone. And he said, what about earnings? And I said, I can't tell you what happens with earnings anymore because what happens overnight and the next day, 9:30, are two different things sometimes. So it has to, I said, I can't really tell you anything other than it has to hold this whole 350 area and then bounce off that. Well, I guess the earnings, it had a lousy day on Wednesday. Thursday, the earnings come out, spikes up sharply. Today it's giving back a little bit, but this is exactly what you want to see. And I said to him, The weekly chart shows no sign yet of weakness, and that says to me, you've got your eye on the prize, but I can't actually advise you anything yet. We have to wait for the dust to settle. And that's exactly why I'm saying this is a rotational market. Look, Essentia is not being, yesterday it went up. Well, it was lucky. It had earnings, I guess, when the market was sharply lower. Well, look at this, is holding well. And that's really the issue that I wanted to talk about, that the reason why I say to subscribers, you must have taken some money off our really good positions, but you want to be looking at them again, because on the pullbacks, we want to add back some of the profits we've taken, and we still kept core positions because those sectors are still doing well. And I'm just looking at here, and I'm seeing the XLF has a nice bounce off the low, KRE, which is the regional banks. We got out of those generally with a profit. It's starting to find a base. I want to see the regional banks, if they can, do well here. So now let me tell you, the Dow is up 189 and the S&P is up 17. And that's what I was talking about in this rotational correction. I'll be back in a moment.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Look at this move. Look at this move in the 10-minute E-mini. Spiraling up 32 points. Of course, compared to where it's come from, that's not a big deal, but it's a big deal because it was such an important session. Of course, it's options expiration. So I said to in my opening call, my Dow chart that I show every single day, I said, if early selling gets out of the way, then the market can rally. Well, we're up 300 in the Dow, up 36 in the S&P, after being down almost 300 in the Dow in the futures, and down 68 or at some point in the S&P. This to me is really important because it's part of the rotational aspect. And when I spoke about the VIX yesterday, I said, if the VIX closes higher, we've got to be careful. But if it goes to a higher high than Wednesday's high of 28.32, that's a different kettle of fish altogether. Friday at 4 o'clock, where the VIX closes, are we going to see Japan? You remember back in the week of August the 9th, it was actually the 4th and 5th of August, that we saw that move up. And then you had that high at 65.73. It was this overnight thing with Japan. I said, what's going on here? This is not our market or anything like that. Well, look what happened. Well, we want to see at 4 o'clock today, this VIX index have a long wick just like that. Because if all of a sudden things turn around by 3 o'clock, we're now back down, and the Dow is only up about 100. That's a big turnaround. That VIX will pop right back up. Or the S&P, which is now up 44 points. Oh, amazing. I love that kind of action. Anyway, this is really important. And I spoke about it. I said these single leg A up in the single legs in the VIX index in the weekly chart that invariably close. There was one where it didn't close. You remember it didn't close the week of the 5th of April. It closed high, and I said, uh-oh, you got to be careful. And that was when we saw all those round numbers in the semiconductors and all the high techs. And you remember the smash they had to the downside. Some of them haven't even recovered from that. A lot of them actually did. This is Iran, Israel, yields everything on the 19th of April, and that was a turnaround right there. That's different. Almost all the other ones that have been the single news-related response has a strong up spike and then a long wick. So I want you to just mention this. The day is so young. We're an hour into the session, and we've already had this huge reversal. And that's what I was trying to do yesterday by saying, let's have a trading long, and we're putting a tight stop. But when I put that, when I started typing it, the Dow was still down sharply, and then it started to come back. It really hadn't done very much. By the time I sent the newsletter out, it already spiraled. And then that sharp pullback, and then the Dow closed. I had a Chapman wave low trend gauge reading for the second day. I had it for Tuesday, and we got that big pullback on Wednesday. I had it again on Wednesday, a low trend. That's really unusual when the market, the Dow drops 1,000, the other indices drop so sharply, and the trend gauge, that's Richard Arm's index, not mine. I use it just two numbers. It was very low. That should have said we've got, and my rule of thumb is that if it doesn't go negative, I can't put it as a positive. But there have been times where the Dow was up 300 in the futures the day before. By the end of the day, it actually went negative. But this one didn't. I have to cross it as a negative, even though it pulled back from a 450-point move, almost 500 points, and then it closed up 14 points. Anyway, so I'm talking about that because the day's young. I want to see where this closes because it could say that the huge bears. There are people here that are talking about a generational high. I can see this consolidation going on for a while. I don't see a generational high. If you look at the IAI, which is the broker-dealer ETF, yeah, it pulled back pretty sharply from the 154.38 Chapman Wave 2-bar reversal, all-time high, and it's trading now in the 143. It's 10 points. It's about 8% down. I don't get the sense, if you look at Robinhood, I don't get the sense yet that this is the top. I don't get the sense that people have, you had these, let's see what QUBT is doing today. Oh, I've got other questions that I've got to get to. QUBT made a high, I don't know if it's an all-time high, but up in the 26 area the other day, 27 maybe, and pulled back sharply yesterday, and today it's up 17% at 17.73. But that was really the only sector where I started to see word mentioned all over the show, and otherwise it was quite a quiet move. And that just says to me, that's the kind of thing I'm anticipating in the general market, with people all around the world playing their own stock markets, but especially America's stock market, and we get this major top, and that to me will be a generational top. Don't know about a generation, but a major, major top. I don't think we're there. And therefore, I think everything that we're looking at here is transitionary. In other words, it's rotational, and each one's taking its own turn. Now, I have to get to, so I did that. So I'm sorry, C. Abram 31, yesterday you asked me about coin. I had a couple of people actually ask me about coin. I'm a little cautious here. So coin is Coinbase Global Inc. It made this triple top, peak A, B, and there's no other way to count it but a peak C right here. And that was with a Chapman Wave 2-bar reversal right there on the 6th of December. It goes to 349.75. Next day it goes to 340.16. Is that 8? 340. No, it was a... Oh, no, I'm sorry, wrong one. On the 5th of December, it goes to 349.49. Next day it goes to 349.75. Chapman Wave 2-bar reversal. Gets this sharp pullback between the channels, takes out the propellant zone, pulls back. I'd be real careful, and I have subscribers in Bitcoin, and it's done really well. I just said this, just got to take a little bit off, and I had said that I'm anticipating that Bitcoin is making some kind of a top here. It has the same thing, except that's a G in a 2-bar reversal right there. That was the same thing, not the same days. That was 16th and 17th. It went to a slightly higher high in the 17th, pulled back. I'm watching this closely. I don't have a signal yet, but I've said just be aware that this is looking to me kind of toppy, just needs a breather. All the technicals are still strong. I'm watching it very closely. Okay, so that's coin. So what if you're in it, watch 90,000. That's Bitcoin, the futures. If you're in coin, it's a different chart pattern. It's making lower lows and lower highs. In this case, it's at 279. If it closes under 260, I think there's a chance that it could go down to the 243 area. That's what you got to watch closely. It's a peak D in the weekly chart and a leg E in the monthly chart. The next thing that I wanted to look at was snow for Jason, SNOW. This is Snowflake, 186 high on the 6th of December. I'll talk about it. It's a little different to the others. I'll be right back. Dow's up 319, S&P's up 42. Gosh.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019. finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn. And he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So I'll get to BlackBerry in a minute, DB, and it's very interesting because this goes into the Eastman Kodak category. Who even remembers it, right? So let's just do snow. So snow, I'm looking at, and I'm suggesting that the 200-period moving average of 179.03. This is Snowflake Inc. Does global data platform. It had 186.90 recent high. The all-time high was way back here at 429. Round number all-time high after the IPO in December 4 years ago, 2020. Round number high goes down to 110.75 in June. It actually went to June. It had a big arch formation and then came back down, retested it at 107.13 in November. So this could be a brand new move. If Snowflake, anytime in the first 2 or 3 months of the year coming up, is able to close above 237.72 for 2 out of 3 months, I would suggest to you there's a chance that it could go much higher. I don't know about going back to the all-time highs. But in the meantime, short term, where would you add to the position, Jason? I would say this gap that's right here, with a low on the 21st of 161.16. The low that was made the last 3 days is 169 and 160.76. So 160 has taken it out, but it's closed above it. So that's the arch formation. And that says if it can close in the next 2 weeks, going into the first week of December, let's say, above 173.40, there's a good chance that it's going to go at least to 178. But it's making lower lows and lower highs. And the weekly chart in peak D, ABCD, no, it didn't go to E. I don't know why I put that E there. Let me just get rid of it. It is a D. That just says, and the way it's working, it's this arch formation, it's working its way higher, says to me, at any point in the next 2 weeks, if it closes into the gap, but actually I'd give it a little bit below, I'd say if it closes under 150, if snow closes under 157 anytime in the next few days, that's going to be a big problem. But it's a tough one because this huge, I mean, there's a gap from the 130 to the 160 area. Some part of it has to be filled. So what do you do? What do you do? I mean, it's more like an island reversal. If a gap's down underneath 159, that's an island reversal. I don't really know what to tell you at this particular point, Jason. You've had a fantastic move in your Rocket Labs I don't know whether you're still in it or not. It's had a spectacular move up to 28.10 with a 24 round number low on the 3rd of December. Now it's just gone sideways to down. So you're a really good picker. I don't want to mess around with that. I tell you what I'm going to suggest. If you're prepared, I know that you don't always talk about this. You like to get into the position and kind of forget about it. But if you are prepared, right here at 167.38, I would say just get a nibble. Just start a position. You can even have an option. Just get your foot in the door because you want to know how in the next, today's Friday, I'd say, so Christmas coming up. I would say in the first few days of this coming week are going to tell you, because today's low is 161.55. If it takes it out, you don't want any part of it. But if it actually moves up to 168.70 to 169.30, wow, that's kind of nice. And that tells you it's trying to build support so that it'll be market conditions. This is it. It'll be market conditions that drag it down, because as an independent unit, it looks like after the gap, it did so well that it wants to trade more in the 165 to 175 area for the next week or two. So that's what I'm saying. Just start your engine for the new position, and that'll give you a sense of what to do. And we'll look at it again later next week. All right, let's go to the next thing. And I'm looking at, I did that. And then there was a question. What was, BB. So BB is, I thought it was Best Buy, but Best Buy is BBBY. I think BBY. Yeah, Best Buy. Whoa, not looking too good on the 200-period moving average. So I looked at this just recently. I said it came up as a screamer in my under $10 stocks, and I thought, wow, let's put this together with a Kodak, which is KODK, also a prehistoric instrument that got just overrun by new technology. And look how beautifully this Kodak is holding here. So I have to put them in the category because it seems to me that people are buying certain stocks for some reason. So maybe it's a takeover. I can't see anything in the chart that gives me a clue as to say that it's a one-time news event, because look how steady. Look at the weekly chart from August, the week of the 9th at $2.01. It makes a peak A, then a peak B, peak C, peak D, and it pulls back, but it holds a 50% gain. And then it starts a brand new, I'm calling this a gray A. This is a blue B. I'm calling this a brand new C. It could turn out to be an E. But I think that this, because it's challenging. You know my rule on the wicks, especially the Chapman Wave Roman candle wick, and that's what we had today. I'll go through it in a moment for the Dow. Look at this. It's held for more than the whole week so far, above the halfway marker of this huge candle that inverted and closed down after spiking higher on the week of the 17th of May. It starts off at $2.91. It goes to $3.85. And then it closes where? $2.83. So all I can say is this is really good action. It suggests that over the next week or two, it suggests that I can't give you a time. It should be quick because it only has 1 week of rest and then it goes to a new high. I'm suggesting that by January, the first week of January, it looks like it wants to tag the 385 high of the week of the 17th of May. So if we look at it from, I always have to go to the lowest low bar. Yeah, I can do that right here. So that's the lowest low bar. That's a peak 33. So this is a peak A, peak B. Gosh, they're so close. Peak B, peak C, peak D, leg E. Okay, so it's done really well. So, yes, I like it. The question would be, I don't know whether you're long or you're not. If you're long and you're long from lower down, I'd say do nothing. In terms of changing your position, because that's your core position if you got it. But if you're looking at it and saying, I want to get in now in this environment, look how nicely it did, even in the bad conditions over the last couple of days. Look, it's been going high. These are independent stocks. They are under the radar. They're doing their own thing. So I'm going to suggest, if you want, I would just, if you're going to get in now fresh, I'd nibble at $3.49 because my target is a 12% move to the upside if it's going to tag the high that was made recently. Monthly chart is just, I don't even have to go into it. This is one of the favorites way back. and then way back is really way back, prehistoric times. So this is something brand new. It doesn't look like takeover unless it's takeover talk. Talk means it can keep going up because the news is still out there. But if it's on a product, boy, they've got a lot to do if it's a product. And that's saying that whatever it is, the folks like it because it's a stair-step move and it just keeps going to high highs. Yeah, let's look at it again next week, but I'm saying nibble here. If you're not in it, if you are in it, I take a little bit off for money management and I would just let it ride because it's doing well. I'll be back. Dow's at 354.
Ho, ho, ho! The Tiger Dollar Holiday Double Bonus Sale 2024 is here.
Amazing money!
Now through December 23rd, we've doubled the bonuses. Don't miss your opportunity to get a double bonus up to 40% on your Tiger Dollar purchase. Here's how it works. Purchase 500 Tiger Dollars and receive 100 bonus Tiger Dollars. That's a 20% bonus, $600 total. Purchase 1,000 Tiger Dollars and receive 300 bonus Tiger Dollars. A 30% bonus, $1,300 total. Purchase 1,500 Tiger Dollars and receive 600 bonus Tiger Dollars. That's a 40% bonus, 2,100 total.
Oh, wow!
But you have to hurry because this Holiday Tiger Dollar Double Bonus Sale ends on December 23rd. Visit the front page of TFNN for details and get your Tiger Dollars today.
Ho, ho, ho! TFNN!
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, so just in sum, that VIX index is now even lower. It's down 4.51. It's down 18% at 19.58. The day is young. There's options expiration. A whole bunch of things could happen. But if this goes all the way through to Monday and the VIX can go down to 17, I'm not saying everything's over and that we're going all the way to new highs. What I'm saying is this rotational aspect is going to be so important because what you need always is, I always talk about the scales of justice, on the one hand this, on the other hand that, but you need to have a balance so that money is going to flow somewhere where it's treated well. And that's why I'm saying I'm watching to see if finally we get a response. Look at this IWM. What a nice move. Wow, if I had done this today instead of yesterday, we would have had just such a nice position because we would have got close to the low. And now you've got a big cushion. It could turn around, it could fail, it could do anything it wanted. But you can raise your stop and you've got yourself a gain no matter what happens. Even if it gaps down overnight, this thing I mean, from the low today of 218.07 to 223, at least it shows you that money wants to flow somewhere, and it gives you an idea. Not that this is the next move to the upside. I'm saying if there is a rotation and money comes out of the, let's see what Microsoft's doing. Microsoft coming back from a sharp move down. It ran to 456.60 in the recent high. All-time high is 468.35. I've been looking for round numbers. I haven't seen any, but this is holding pretty well in a range. Look, weekly chart and the monthly chart, put it together with the SMHs, a different category, but also TAC. And the SMHs are saying, hey, I'm holding well. And that's why I'm saying, and look at the TLT. The TLT is attempting a bounce. It's up 88 cents, 88.69. I didn't feel like there was going to be a major market collapse individually and a rotational correction. That's really what I'm seeing. There could still continue to be a rotational correction. I'm completely wrong if by the end of the day we're down 300. That just says, are you crazy? This is serious. I think it's rotational. And that's how I'm standing. Check out my opening call. Don't forget the Tiger Dollar Sale. Fantastic.